Hello and welcome to Pro Trader Strategies Market Commentary for Monday, March the 19th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please take a minute to read over this disclaimer, as trading is margin intensive, money intensive, and you could lose your capital. So read this disclaimer. Any opinions, news, research, and analysis is for investment. Hello and welcome to Pro Trader Strategies Market Commentary for Monday, March the 19th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal. And please take a minute here to read over this disclaimer, as there is a possibility for losing all of your capital. And remember that everything we're talking about in this market commentary is to teach you how to trade. It is up to you to take what we teach you and implement it into your portfolios in your own way. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with some economic data. Across the pond, not a whole lot to see here. We did get Italian industrial production coming in at negative 1.9%, expected to be a negative 0.5%. They did revise last month's number up from a 1.6% to 2.1%. So nice little revision to the upside, not making up for what we saw in that pullback in the headline number for this month. Also, we have Fed member Bostic speaking. One thing to note about that, there's no monetary policy being spoken about because we have the FOMC minutes or meeting actually on Wednesday. They're going to release whether or not they are going to raise interest rates from 1.75 to 2%. It looks like they're going to remain unchanged at 1.75%. So barring any surprise on Wednesday, which is the big day for economic data. We also have crude oil inventories, that FOMC minutes that I mentioned, and a couple of other ones. But for the most part, relatively quiet week until we get into maybe even Friday, where we get durable goods that might stir some things up there, and new home sales. So that's all the way into Friday. So we're going to have to wait, get a little bit of economic data here and there. But for the most part, we're on our own, it looks like. Other than Wednesday, probably going to be a lot of shoring up of positions, hedging, things of that nature going on today and tomorrow ahead of that meeting. All right, let's get on with it with the with the charts. We've got crude oil coming off just slightly by about 23 cents, continuing to bounce up to this new trend line that I've kind of formed. The reason why is because it's all kind of coming in line with where the 50-day and everything else is kind of merging. So that is going to act as major resistance there. Don't really see it pushing too much above that with the inventories we saw. Economic data pictures so far being, decent, but just not robust enough to really drive those prices higher. We've got gold moving higher today. It's not because of inflation, but it's because the equities are kind of getting beat up a little bit. So it's a flight to safety in a sense. That flight to safety isn't really showing up in the Bitcoin futures, as they are off just slightly, kind of stuck in the mud right around this 8,500. It's getting a little bit comfortable here. The bulls are desperately trying to get this above 10,000. It's not going to happen anytime soon. Especially, I just saw something, when it gets below this like 9,000 mark, it is not profitable anymore to mine, to be a Bitcoin miner. So I was talking to some friends. What does that mean? Does that drive demand because there's lack of supply if they're not producing any more Bitcoins? It doesn't seem to be really showing up right now, but that is something to keep an eye on with the levers and pulleys of this particular product. Remember, there is a supposed finite amount of Bitcoin out there, and they have to be mined over time. With that not being profitable, I wonder if some of these miners are actually starting to shut down some of their operations while it's not profitable. That may drive demand, I guess, or lack of supply may help increase demand in a sense. We've got VIX back up into the 20s as we're seeing the overall equities come off, as you can see here with the Dow Jones Industrial Average over 350 points to the downside, opened up below this trend line. That's not a good sign for the bulls. They would want to see it continue to march up in this about 45-degree angle. We're not getting that. And as a matter of fact, we're kind of pushing down below the value area high for where the volume has been traded. And that being said, or actually this is the value area low for where the time has been spent. The value area high is way down here. Very choppy looking market profile here. But testing this low of the value area for the time, that is going to act as support. But we could easily see that kind of fall to the downside. I haven't thrown up any Fibonacci's in and around this. Let me just try and get one on here real quick if I can, just to see where the levels are for the Dow Jones. Make it, quick and dirty, if you will. So you can see right here, 24 is the 38 Fibonacci level. So kind of in no man's land on the fibs, but right there where it could want to get comfortable, but we break below this value area low for the time, that could start being a little bit more bearish. On to the NASDAQ. As you can see, NASDAQ in percentage terms looking much worse than the Dow Jones so far, but they're down over 100. What is that? 160 points right now. Can't see. I probably need to get my glasses out or zoom in or something. But down quite a bit, but right on that 23 Fibonacci level, which is kind of lining up nicely with that 50-day moving average. Still within the trend channel, as you can see. If we drew that out a little bit further, it'd still be within its own trend channel that I've drawn, but pretty ugly day for the overall equities. And if we look at the E-mini S&Ps, again on its Fibonacci level. Now remember, this is the extensions that I drew, and they lined up quite nicely with some of the other Fibonacci, the longer duration ones, which is why I want to keep that in there. That being said, we have bounced off of the 50 for this retracement on the Fibonacci's right now. So acting as a little bit of support right in there where this low volume node is on the market profile. Then we look at the daily chart of the E-mini S&Ps. You can see overnight inventory was getting short as they were covering from last week. I was talking about this, pretty boring inside days along. It feels like you're kind of winding up to get ready to do something. It looks like that happened today when we snapped below this shorter Fibonacci 61 fib level and have immediately gone down to test the Fibonacci level down on the 50. So this was right on the open, not a whole lot of room to the upside. It was immediately pretty well apparent that the market was going to be coming off. Now, I'm still keeping an eye on Procter & Gamble. This is one of those situations where I was talking about when I put on this Procter & Gamble to the upside. If we start pulling out a tech like we're starting to see today and some of the other markets start seeing chinks in their armor, what do people have a tendency to do? Well, they kind of rush to the staples, the ones that are the bellwethers, if you will, or the blue chips. And that's what we're kind of seeing today with Procter & Gamble getting a little bit of support here off the 161 Fibonacci retracement here. We're getting a little bit of bounce off that, finding some support. I think some people are doing a little bit of flight to quality where, they're getting out of the more volatile and into some of the staples like the Procter & Gamble, which is what I'm hoping will happen. We start breaking much below this 161 though, and I'm going to be pulling the ripcord on it. So I'm still keeping an eye on that. IBM, I added, this is a trade I added to my overall portfolio for the margin account. IBM has a tendency to kind of settle down in and around or in between the earnings that it has. So you can see right here, it kind of settles down. Yeah, it did kind of march up a little bit, but in between it has a tendency to settle down pretty good. We've had some volatile moves after that earnings. We've got a month to settle down. I think that we're going to maybe even trickle down to the point of control and we'll start settling down. That's what this market's going to want to do. So I threw in a strangle around IBM in the April. I sold the 170 calls and then the 145 calls in there for $1.74. So again, I'm outside of the value area above to the upside. My 175 calls or my 170 calls are way up here. One could almost argue very close to the highs of the year. Or at least those are the highs of the year, I should say. But highs of the last 52 weeks. Anyway, that being said, I think we're going to settle down there. My 145s are below the value area low. So my placement here is outside of this whole area where people are finding value. So I'm very happy with that. I think if we get overextended on one of those sides, it's going to want to settle down profit taking or something along those lines. So I think that that's pretty good price placement for those. Sorry, throwing that disclaimer in there. I was trying to switch things up a little bit to kind of speed up this whole process, get these things done a little bit quicker. Not really happening right now. Anyway, on to Tesla. Remember, I bought a 2-year put on Tesla. I basically financed that with the first round of calls that I sold against it. I was like, I really got doubly short on that. But the calls that I sold against my Tesla long puts, I essentially paid for them. Tesla still has high implied volatility. I've got a month of free, in a sense, here. I'm still playing it to the downside, but I decided I wanted to collect a little bit more credit, take advantage of some of this high premium in there. And I don't have Tesla up here as a chart, and I don't know what happened to it. I was pretty sure I pulled this up. Let's just pull up this IBM and throw in a Tesla because I know that's what I want to talk about right now. Tools. TSLA. My fingers are in the wrong place. That's the problem. TSLA. Tesla. So Tesla is still playing this to the downside. I've got those long 2-year puts on there, but I just decided to go ahead and sell some puts in there to try and finance a little bit more, collect a little bit more credit. I don't really see it coming down to my 150 puts anytime soon. So I was able to sell some 200 puts in here in order to finance a little bit more, collect a little bit more credit. Looks like it's kind of trending sideways, bouncing inside this value area. Not a whole lot of things to talk about other than maybe SpaceX or something like that. But with Tesla, I went into the April and I sold the 200 puts in there. I'm long the 150 puts, so I've got $50 of risk there in a sense. I don't really care about that. I think it's pretty far away. And I sold those for 64 cents. So as long as we don't really have a massive meltdown in Tesla in the next 30 days, I will be very happy. All right, on to Intel. This is one that I actually have on in my margin account already. I sold the 55 puts, but the volatility started rising, and I wanted to add this trade to my overall IRA. So I have an exposure in this and across the board. So I went into the April and I sold the 54 calls, and then bought the 60 calls to define that risk, and I collected 40 cents for that. So again, well above the high move. We've got all this consolidation here above where I had originally pulled in this Fibonacci for the tweezer tops here. That's a major area of resistance. It's going to act as resistance again. As you can see, we kind of popped on it as support. Now it will act as resistance. So I'm hoping that we can see a little bit of profit taking going on, maybe kind of bounce around between these two Fibonacci levels and be able to collect that credit on both my 55 calls in my margin account and the 54.60 call spread in my IRA. All right, that's all I got for you guys. Friday's webinar is going to be a really good one, so go to protraderstrategies.com, sign up for that. I hope you guys like the new setup. I'm going to be trying to streamline this just a little bit more to kind of thin these out, make them a little bit shorter for you guys so you don't have to listen to me jabber for 15 minutes. All right, that's all I got. If you can't take that, take it easy.